Good afternoon, guys. Welcome. It's Saturday, February 26th. My name is Dave Coker, and this is Talking About Finance. And you know the routine. 7 slides for 7 days, although I think we usually have 8. It's got too much to talk about. Material comes from a combination of my original research that I sell to banks and the Telegram channel that, about 45 or so of my friends and I are on, and we've all been in finance a long, long time. So let's start out as we always do by talking about the markets. And once again, really chaotic week. Oh, my gosh, absolutely amazing. So we see geopolitics dominating the markets. Market, trending up still. Now, shares very, very chaotic though. And the near-term outlook is for more uncertainty. And we do know a lot of people have moved to cash, but we did see the shine come off safe haven assets towards the end of the week. SPX finished up about 10 basis points on the week. The VIX traded down a little to 27.59. Now remember, the long run mean of the VIX is 19, one standard deviation is 8. So we're roughly at one standard deviation. And again, this week we're not seeing what I would consider a real buying op. I do buy things, I trickle in a little bit, but I've got a fair amount of cash, just waiting for a really good buying opportunity. It isn't here. So wait for a 2 standard deviation move in the VIX, and then you can pile in at that point. The 10-year traded up slightly to close this week at 1.97%. We're starting to see the 2% threshold, and that's absolutely important. It's psychological, number one, but recall, as the risk-free rate, as the 10-year rate increases, stocks are less attractive overall. So oil's at $92. It's up 20.2% year to date. Now, this market, sanctions were announced, but they're sort of light touch. So we got to be careful about reading too much into that. Second of all, personal spending was up 2.1% month on month, but it was forecasted to come in at 1%. That's interesting. We're going to pick this up when we get a little bit deeper into the details later. Durable goods up 1.6% month on month versus the forecast of 0.7%. And PCE inflation. Now, this is the gauge we know the Fed pays a great deal of attention to, not CPI. They look at PCE deflator, it's called, PCE inflation. And it's up 5.2% year on year, the highest since 1982. Let's get a little bit deeper into what's going on. Now, here's an interesting one. If you're looking for a place to put your money, oh my gosh, yes, here we go, perfect, okay, good. If you're looking for a place to put your money, space stocks, real crash. Oh my gosh, it's absolutely amazing. Like a lot of companies that went public by means of a SPAC or a blank check acquisition company, we're seeing a big burn off in a lot of these stocks. And I did this. I wrote about 1,000 words for my clients talking about space stocks and SPACs in general and about how we're seeing this huge burn off. And you can see here, guys, S&P 500 since May 19th, 2021. That actually, I didn't pull that number out of the air. That's as far back as we go for. I believe it was Redwire. I'm not totally sure. I'd have to go back and look, but only one of those stocks, not all the stocks go back any further than May 19th, 2021. So S&P 500 up 6.54%. And look at these drops. They're absolutely incredible. You got Rocket Lab, negative 5.41%. And then at the other extreme, you got Momentus down over 80% in that period of time. Really fascinating what's going on there. So still, what are you going to be doing with your money? Where are you going to put it? How about Apple as a safe haven? Interesting one, isn't it? Take a look at this. Here we've got the overall stock market. We've got the tech-heavy part of the stock market, PSE, down some 12.41%, Microsoft down about 12.23%, and Apple down 8.23%. Now, I'm a Mac head, as you know, and I'm also very opinionated. I think Apple should get out of the phone business and things like that and just focus on the Mac and try to identify a new generation product. But, they don't listen to me. But in any case, wonderful company, a real juggernaut, generates a lot of cash flow. And there is an argument that it could be a safe haven stock now. A lot of people put money into Apple because we do know that even if we were to go back into pandemic, Apple would do quite well. They did really well during the pandemic. Sales spiked. And it's something to pay attention to. But regardless, guys, we know with inflation and other factors that we're going to be talking about, times are getting tighter. Personal savings. Remember all the noise, and definitely I reported it here. The noise during the pandemic about savings was at record levels. Well, guess what? Some $5 trillion. Now, we're not totally sure about the destination of it. Don't think it's all gone to finance consumption in the higher inflation, although some of it definitely has. Hopefully, people bought assets that are tangible, real, and physical, meaning property, gold and silver. I like gold and silver, things like that, or even dividend-paying stocks. Hopefully, they didn't fritter this cash away with meme stocks and garbage like that. But yeah, times are getting tighter, and we can see this when we look at different metrics here. We've got disposable personal income, and we got disposable personal income, the trend line. The red is the trend. And you can see we've broken the trend and disposable personal income starting to fall. We'll have to see how this manifests, how much longer it's going to continue for. It's really important that we track that because we know inflation is surging and the Fed is in such an awkward position. Inflation is really, really out of control in the States. It's absolutely incredible how much CPI is bouncing up. And once again, we can see that their only policy solution is to raise interest rates, but the economy, we're seeing GDP flatlining, coming in at less than 1% or forecast for the next quarter. Not totally sure what they're going to be able to do about this. There is a school of thought, and we talked about this a great deal on the Telegram channel this week. There is a school of thought that they won't be doing any interest rate hikes, or they could be just doing 25 basis points, and we're done. And once again, you got to think what's going to happen with inflation if they just don't do it. Take a look at this chart. Very fascinating. Here we've got the CPI basket, and more importantly, we've got the share of the CPI basket where the items are priced at 3% or higher. And we got the Fed funds rate. And you can see we're in strange territory here. We've never really seen, unless we go back to the 80s, at least in recent times, we've never really seen inflation that high and so many items in the CPI baskets priced so high. Go back to the 80s when we last saw this and look at Fed funds back then. I remember that Fed funds was ridiculous, almost 10%. And then when you took a look at risky type of loans, say mortgages and stuff like that, there were people paying 18% to get a mortgage. My gosh, absolutely incredible. So we do have to pay attention to that. Now, finally, this is so cool because we know that Canada has done some stuff. Trudeau has done a lot of stuff to try to cripple financially the protesters in his country. And one thing was they're trying to go after the crypto exchanges and have them freeze the money. Well, this started a big Twitter thread, lots of threads. This is just one that I pulled, right? Where people are saying, get your Bitcoin off the exchanges. Guys, if you don't have your own keys, not your coins, if you don't own your keys, if you can't just pull that money off and put it into a wallet that you fully control, it's not your money. It's just sitting there and it's waiting for a government to freeze it. It's waiting for a government to grab it. Who knows what would happen? So once again, the two words you need to know are Trezor and Ledger. Doesn't matter which one you use, get your coins off the exchanges, get them onto a hardware wallet that you control, and try to avoid the no-name wallets. There's lots of them for sale. Don't do that to yourself. We've heard many reports of people buying, they don't want to spend £100 on a Trezor, for instance. They buy some knockoff brand, who knows where it came from, what the name is, and they're getting it for 20 and they think they're smart and they put their coins on it and one day all the money's gone, right? So you need a credible brand and you want to get a Trezor, which is what I use, or a Ledger. And furthermore, I use multiple Trezors. So after I get a certain amount of Bitcoin on one, it goes away, goes to live in my safe deposit box, and well, there are physical attacks that are documented on Trezors. So it goes to live in my safe deposit box and I get a new one. And that's really best practice from my point of view. And finally, once again, saving the best for last, guys. Finally, check this out. This is actually pretty interesting. A lot of information here. And this is off Plan B at 100 trillion USD. A very interesting character, posts on Twitter a fair amount about Bitcoin. And this chart's got lots of information. First of all, the solid gray line is the 200-week moving average. Sort of cool. Looks very good. And then above it, we see prices at discrete points. And the information that he's communicating with the colors is we're trying to see how far away we are from the all-time high, looking backwards. So red means we're pretty far away. We're at the all-time high, I should say. And then when we go to blue, it means we're pretty far away from the all-time high. Really interesting. So now you'll notice that there's 3 distinct points where we reached all-time highs. They correspond with the halvings that happen every 4 years, roughly every 4 years, 210,000 cycles, Bitcoin mining cycles. We go through the halving, half the reward rate. And once again, we could see a sharp gap up. I really don't predict stuff like that. I just buy and hold. But some of the people are predicting a sharp gap up this year, actually going into 2023. Could happen. I don't know. I don't care. I buy, I hold. You should do the same thing too. Get trading out of your head. Ain't going to happen. Just buy Bitcoin every week like I do. You don't have to buy one Bitcoin. Remember, a Bitcoin's divisible into 100 million Satoshis. You can put 10 pounds a week into Bitcoin. Put 1,000 pounds a week if you're a high roller. I don't do that. I buy Bitcoin every week, but not that much. I've been doing that for years. I'm quite happy the way it's turned out for me. Don't try to trade. Okay, guys, that's it for this week. Have a really wonderful week, a very profitable week. We're all going to be making some money. Take care, guys.